Hello and welcome to India Business Hour. I'm Shireen Bhan. Thanks very much for joining us here on the show live on our YouTube page and of course on TV as usual. Here are the headlines that we're tracking for you at this hour.
Better Titan for this, and the capital market speaks for that. The culture of Titan speaks for that.
CaratLane founder Mithun Sacheti explains the rationale behind the 4,600 crore rupee sale to the Tata Group company Titan. The deal values CaratLane at 17,000 crores, making it the second largest exit for an e-commerce founder since Walmart bought Flipkart. Sacheti says that Titan was not keen to IPO CaratLane and hence an exit was the right thing. A positive start to the week on Dalal Street. The Sensex gains over 250 points, the Nifty up 80. IT, metals and select financial stocks lead the rally. Jio Financial Services marks the first listing from the RIL Group in close to 2 decades. Lists at 262 rupees per share with a market value of 1.6 lakh crore rupees, making it the second largest non-banking finance company in India. Sun Pharma's Dilip Sanghvi says private equity companies are becoming important players in the pharma sector, but also adds that Sun Pharma's size prevents any large transactions. Sanghvi expects the specialty business to drive growth. That's a Money Control exclusive. The Medical Commission bars doctors from participating in seminars, workshops or conferences sponsored by pharma companies or allied health sector. Also bans them from accepting consultancy fee honorariums from companies or corporate hospitals. Doctors flouting the rules could face a 3-month license cancellation. The Consumer Affairs Secretary defends the government's decision to impose a 40% duty on onion exports as the move is not premature and will ease prices in the domestic market. Onion farmers protest in parts of Maharashtra against the move. Around 500 pilots quit. Crisis hit Go First. Sources say the grounded airline is now left with just 100 pilots and salaries have not been paid to employees since the month of May. More than 1,200 employees have resigned in the last couple of months. That's a CNBC-TV18 exclusive. A CAG audit report reveals 93% routes under the UDAN scheme failed to sustain operations beyond 3-year concession period. 52% of the routes did not materialize at all. The report directs for an audit of the Regional Air Connectivity Fund Trust. Also highlights that there hasn't been an audit of individual airlines on UDAN since 2018. Prime Minister Modi heads to Johannesburg for the 15th BRICS summit starting tomorrow. Reports suggest China is likely to propose an expansion of the 5-nation grouping to include rivals like G7. India and Brazil are likely to oppose the move. No word yet from the External Affairs Ministry on a potential meeting between Prime Minister Modi and China's Xi Jinping. ISRO releases new images of the surface of the moon as the Vikram lander gears up to touchdown around 6 p.m. on the 23rd of August. This is the first attempt by any country in the world to land a rover on the south pole of the moon. Well, we are all counting down to Chandrayaan-3 making its way to the moon. But first, let's talk about the market action. A positive start to the week on Dalal Street today. So we saw the markets gaining ground. The Sensex up to almost 0.5%, 267 points higher. The Nifty also up about 0.5% higher. The Nifty Bank was up by about 150 points and the Nifty Mid-Cap Index put on about 300 points. So a strong showing there for our markets this Monday afternoon. Well, let's talk about the big newsmaker today, and Jio Financial Services made its debut on the Indian bourses. Shares listed on the stock exchanges at the price of 262 rupees a share. Now, this values the company at 1.6 lakh crore rupees, making it the second largest non-banking finance company after Bajaj Finance. Here's Chairman of Jio Financial Services, KV Kamath, on the listing and the road ahead.
Jio Financial Services will seek to optimize all that India provides. India is in a growth momentum like what we have possibly not seen. The team will endeavor hard starting today, as it were. They have been working for the last 5 or 6 months, but starting today with the listing, they would endeavor to work even harder to achieve what we have set out to do and be an important player in the financial services sector of this country.
Jio Financial Services will continue to remain in FTSE index. That's another announcement that has come in. And Jio Financial Services will be added to the MSCI Global Standard Index on August 23rd. So its filing indicate that the business areas may include consumer and merchant lending, payments platform, insurance broking, AMC and other non-lending services. Now promoter hold about 46% stake. KV Kamath is the chairman, Hitesh Sethia is the CEO and other key managerial details are up on screen for you. There is a Jeffries note which says that the key numbers for FY23 is as follows. Balance sheet size is about rupees 1.1 lakh crore. Rupees 67,100 crore is the mark-to-market gains, mostly on investment in RIL that they made at a cost of about 15,400 crore. The core net worth is about 31,600 crore and Jio Financial Services has investment in pref shares of associates and JVs which is worth about 17,600 crore. On the asset side, the investments are at rupees 1.1 lakh crore, mark-to-market gains and majority of the residual assets are liquid assets. One key announcement that the street may watch out for is that the Reliance AGM is on 28th of August and markets will wait to hear on plans for Jio Financial that they have.
Abhishek, many thanks for joining us. Now let's talk about what's happening in China. The central bank there has cut its one-year loan prime rate from 3.55% to 3.45% while leaving its five-year rate unchanged. This is the second time that China has cut this rate in 3 months. For some context, China's one-year term loan is for most households and corporate loans, while its five-year term loan is for most mortgages. But back home, the big newsmaker this evening, Sun Pharma's Dilip Shanghvi, says that private equity companies are becoming important players in the pharma sector. Just look at the number of deals that are happening and some potentially on the annual. But he also added that Sun Pharma's size prevents any large transaction. Shanghvi expects the specialty business to drive growth. He also spoke about succession planning at the company. Shanghvi is leaving the decision to his son and his daughter. Take a look.
There's a lot of big bang M&A that has happened in the recent past on both pharma as well as healthcare. You're no stranger to big bang M&A. You did the Sun Pharma Ranbaxy deal. What do you take? What do you sort of look at when it comes to consolidation and trends? Do you expect further consolidation in the Indian pharma industry? A lot of private equity funds, sir, are making a beeline for pharma targets. What's your take on the deal environment?
No, I think our size in India business prevents us from pursuing any large transaction because we will have significant product overlap with most of the companies. But I expect that there will continue to be transactions because the viability of future businesses will require some minimum size.
And do you expect private equity to lead the way, sir?
They will be also an important player.
The next generation, as far as Sun Pharma is concerned, has also come on board. Your son is now the whole-time director of Sun Pharma. What's the plan going ahead, sir, as far as the next generation is concerned, and what role could we see Junior Shanghvi playing in the days to come?
Sure, both my son as well as my daughter are actively involved in the business, but philosophically, I think that's a business decision that they need to take, that they would like to be owner managers or working managers or would like to take a hands-off position. We have very good professional management team, so I am comfortable that the company will continue to do well and grow.
Well, that's Dilip Shanghvi on the dilemma of being an owner-manager or a working manager, but also importantly pointing out that Sun Pharma is unlikely to play consolidator given the fact that it is already so large and any potential M&A action will lead to perhaps significant overlaps. Now, India's National Medical Commission has barred doctors from participating in seminars, workshops or conferences that are sponsored by pharma companies or the allied health sector. Now, those violating the rules could face a license suspension for 3 months. The Commission has also banned them from accepting consultancy fee honorariums from companies or corporate hospitals. Ekta is standing by now to take us through what this means and also the implications for the pharma industry as well as the healthcare sector. Ekta.
Thanks for that. Well, yes, the National Medical Commission's new regulations have barred doctors from any seminar, workshop or conference which involves direct or indirect sponsorship from pharmaceutical companies or the allied health sector. The new rules, which is under Section 35 of the new Professional Conduct Regulations, also disallows doctors and families from taking any consultancy fee or honorariums from pharma or medical device companies, commercial health establishments or corporate hospitals under any pretext. In case of violations, a doctor can have their license cancelled for 3 months. Now, the new regulations aim to close any loopholes which emerged after the Medical Council of India had banned all gifts, travel facilities or hospitality which was offered to doctors. For example, to ensure paid travel, companies were representing doctors as faculty and not delegates. Companies have also been paying doctors under consultancy fees or honorarium for taking lectures, workshops, and hospitals have been paying doctors under facilitation fees. Now, doctors can only receive money or benefits as employees of the companies henceforth. Remember, these steps come in conjunction with the conditions that doctors can prescribe only the generic name of medicines to patients. While the aim of the new NMC regulations, it seems, is to ensure there is no nexus between doctors and pharma companies, doctors are unhappy with the recent clampdown and the fact that all doctors are being painted with the same brush. For example, doctors believe there has to be standardization of quality of drugs before they can prescribe generic medicines to all. Similarly, there needs to be more clarity on what disclosures need to be made by doctors when it comes to relationships with companies or hospitals. And all this with less severe penalties. Hence, going forward, one will need to watch whether these regulations under the NMC will be watered down as the conditions put forth by the MCI a few years ago were after protest from doctors.
Ekta, many thanks for joining us. Now the big deal. Titan has acquired an additional 27% stake in jewellery brand CaratLane for over 4,600 crore rupees. This takes the company's stake in CaratLane to over 98%. The deal values CaratLane at 17,000 crore rupees. This is nearly a 30-fold jump from its valuation in 2016. Speaking to me, CaratLane founder and managing director Mithun Sacheti said, and I quote, "There could not be a better home for CaratLane than Titan." He said the exit was the right thing to do since Titan was not keen on an IPO. The deal marks the second largest exit for an e-commerce founder after Flipkart founders sold their stake to Walmart. Take a look.
There could not be a better home than Titan for this. And the capital market speaks for that. The culture of Titan speaks for that. The data speak for that, and I am happy for CaratLane that it's found its home. And I do believe that it's just, you know, in the life cycle of jewelry businesses, which run about 100 to 300 years, it's only 15 years old. So there's a massive headway from this point on. And in 2018, when I tried to raise about 100 crores, which is the only primary capital that Titan put in, I was a little disappointed with the value at that point. I went to him and said, "Look, I don't know what am I doing, and I don't know what am I doing right." And he, along with a couple of other people, friends of his, were over that day. He had, I think he had Ramdev Agarwal, and he had Ramesh Damani and Utpal Sheth who were there. All of them spoke about compounding, and they spoke about what is the right way to compound. And while they were speaking about these things, not directly to me, I took that to heart. And I realized that my biggest gap was that I obsessed too much about my P&L, and I've had very low obsession on my cash flow. And the reason most of us have very low obsession about our cash flow is we'll keep looking at our VCs for funding us. When you decide that you're never going to have money, or you're never going to raise money, and your business has to fund you, you redo and you sort of rework your cash flow situation. And that sort of was a big turning point for me. Like any founder, it's the Oscar for us, right? We would love to see the IPO. There's no doubt in my mind about that. But I understand from their viewpoint, they don't want to have two listed businesses in the jewelry space with two different sets of shareholders. I think it's going to create a lot of conflict for them, and managing that might become more challenging as well also. So while the brands are very distinguished, Tanishq and CaratLane, but I do feel that it could become increasingly painful for them to manage that. And so from that perspective, they're very clear that, and Tata Group overall also has a strategy where they want to consolidate more.
There is no immediate plan, and I don't think we are even considering listing. We will rather run a portfolio of brands for our jewelry business, and it doesn't make sense to us to have two listed entities in the same space.
And you can catch a special interview with Mithun Sacheti of Carrot Lane at 9:30 p.m. right here on CNBC-TV18. It is a founder's journey with plenty of insights and lessons of being an entrepreneur in the D2C space in India. Do watch. Now, the government has decided to impose a 40% duty on the exports of onions till the 31st of December as rising prices have sparked inflation concerns. Remember, vegetable prices have seen a surge of over 37% between the months of June and July. Prominent wholesale markets in Maharashtra, though, are protesting against the government's decision to impose that export duty. Farmers have called the government's move premature. Meanwhile, the Consumer Affairs Secretary Rohit Kumar Singh has defended the move, says that this will ease prices in the domestic market. Take a look.
There is no reason for worry for farmers, and the stuff which was going out of the country in form of exports. So the export duty, which your news item mentioned, will put a check on that, and it will improve the affordability and availability within the country. I don't think it is premature. Prices were going up, and if you compare with last year at the same point in time, we are up by in excess of 10%. In terms of seasonality of onion prices, this is the high price season, and the prices usually every year go up from here.
That is the Consumer Affairs Secretary on the 40% export duty that's now been imposed on onions. And onion farmers, as we pointed out in Maharashtra, are not happy about that. They believe that this is a premature step. Santegura reports that farmers want the government to alleviate some of this hit.
इतना नुकसान हो जाएगा तो इसको खरीदेगा कौन? हम लोग क्या करेंगे? छोटे छोटे बच्चे हैं हमारे पास.
शेतकरी सिर्फ ये वादे में रहते, उम्मीद लगा के बैठते आणि आगे कुछ नहीं होता.
100% से 80-90% तो खराब ही हो गए.
For 72-year-old Vishwanath Bodke from Shimpi Tankli village of Maharashtra's Nashik district, the next few months don't hold much promise. His onion crop was largely destroyed by unseasonal rains, and subsequent heavy rainfall and recent hailstorms have meant that any crop he managed to salvage has started rotting earlier than usual. Farmers like Bodke were hoping the rise in onion prices would offer some support. Since the last week of July, wholesale onion prices in mandis in Maharashtra improved from 14 to 17 rupees per kilogram to around 18 to 22 rupees per kilogram, mainly due to a demand-supply mismatch. But this rise has not helped much because it's still not enough to offset the cost of the destroyed portion of their crop.
हमारा 100 क्विंटल कांदे था. 100 क्विंटल में अच्छा कांदा कितना निकला है? 10 क्विंटल. मैंने कितने 90% कांदा खराब हो गया. ऐसा मेरा सरीका 150 खेती का किसानों लोगों का है.
The government, however, is worried rising onion prices will pinch consumers, especially since tomato prices have already crossed 200 rupees a kilo in many pockets. Keeping multiple price forecasts in mind, the government has decided to release 3 lakh tons of rabi onions into the market. The government claims this will help keep onion prices in check and will bring relief to people who are still paying huge amounts for tomatoes. But the farmers say the government is acting in haste. Maharashtra produces 43% of India's onions, and a large portion of this crop was destroyed. What was salvaged has also begun rotting earlier than usual, with even traders having access to modern storage facilities saying they are struggling to prolong shelf life. Experts claim that 15 to 20% of rabi onions that was in storage has already rotted away, and peg losses from this at around 500 crore rupees. In this scenario, farmers argue that government action to depress prices will only result in higher losses for them.
सेंट्रल गवर्नमेंट जो नफेड और एनसीसीएफ का प्याज है, ये प्याज मार्केट में अभी अगस्त में उतरने का जो टाइम है, वो गलत टाइम है.
But some say this preemptive action is needed.
It's really painful and unfortunate for the farmers, but to ensure that the retail consumers don't feel the heat, the government had to intervene in the market, because if traders would purchase it at a higher price, then the higher prices would only reflect in the retail market.
For now, Maharashtra's onion farmers are reconciling themselves to further financial losses, especially because they are still waiting for the compensation promised to them by the state government in March. In Nashik, Santiagora.
Well, tough times there as far as the onion supply-demand situation is concerned. Up next on India Business Hour, around 500 pilots quit. Crisis hit Go First. Sources say the grounded airline is now left with just 100 pilots. More in that CNBC-TV18 exclusive coming up. And you can catch CNBC-TV18 news and updates on Facebook, Twitter, Threads, Instagram and JioCinema. Well, here's a CNBC-TV18 exclusive this evening. Employees of grounded airlines Go First are losing hope. Sources tell CNBC-TV18 that the airline has been left only with 100 pilots, with 500 of the 600 pilots quitting to join other airlines. Go First employee count that stood at 4,200 in the month of July has now declined to over 3,000 and is expected to fall further as more employees give up. Madhiya standing by with more details. Madhiya, what are you picking up?
Well, clearly the delay in reviving Go First has hit the employees very hard. They're without salaries for 3 months now, and sources say the airline hasn't paid employees since May, and with no other choice left, these employees are taking up jobs at other airlines. What we learned from sources is that 500 of the 600 pilots have quit and joined other airlines, including Air India and Indigo, which we know are expanding aggressively. Go First is left with only 100 pilots as of now, and it's not just pilots. The airline has lost about 1,200 employees since the 10th of July. It had 4,200 employees when it invited expression of interest from potential buyers for the airline. That number has fallen to a little over 3,000 employees currently, but it doesn't stop here. The employee count is expected to fall further to 2,400 or 2,500 by mid-September, as 500 to 600 more employees have quit and are currently serving notice period. Apart from salaries, another reason for their frustration is the lack of clarity on the interim fund infusion that was to be done by banks. Now, lenders had committed to infuse 450 crores as interim funding to restart operations, but sources say banks are waiting for the outcome of the Delhi High Court ruling on the aircraft lessors matter. And since aircraft remain crucial for the airline's revival, it's obvious for any investor to check if the airline will have adequate aircraft to restart operations, and this could also be one of the reasons why Go First extended the deadline to receive expression of interest by a month to the 8th of September. We reached out to Go First as well as the resolution professional Shailendra Ajmera, but they're yet to respond to our query.
All right, Madhiya, many thanks for joining us. So more trouble there for Go First as it continues to lose employees and specifically pilots. Now, it has been a slow takeoff for the government's UDAN scheme. A CAG report has highlighted that more than 50% of the routes awarded under the scheme have been unable to commence operations. In fact, the CAG report points out that only 54 of the 774 routes have been managed to sustain operations beyond the 3-year concession period. Danish is standing by now with the details. Danish, take us through the concerns that have been red flagged by the CAG with regards to the UDAN scheme.
The performance of the UDAN scheme has become a big political issue between the opposition and the government. The CAG has assessed the overall performance of the UDAN scheme from 2017 to UDAN 3.0, that is till March 2023. The CAG audit has revealed that only 7% or 54 routes have managed to sustain operations beyond the 3-year concession period, and 52% of the awarded routes were unable to commence operations. The CAG audit has also highlighted that there have been significant delays in revival or development of airports under the UDAN scheme, and operations have commenced in only 71 out of 116 identified airports. Further, the CAG report has suggested audit of regional air connectivity fund trust accounts as rupees 600 crores are lying idle, and also an individual audit of airlines has been recommended. CAG has recommended that there should be a new mechanism to assess the feasibility of routes and identification of unserved airports in a more effective manner. Further, CAG has also recommended a new mechanism for identification and feasibility of heliports under the UDAN regional connectivity scheme. Well, the Aviation Ministry has also been asked to explore a mechanism to monitor the regional connectivity fund levy collected by the airlines, and a suitable mechanism should be devised to reconcile the viability gap funding claims lodged by the airlines.
Danish, many thanks for joining us. CAG raising red flags there as far as the UDAN scheme is concerned. Now, the Delhi High Court has sought the centre's stand in a plea against a notification where chartered accountants and company secretaries were included among reporting entities under the Prevention of Money Laundering Act. The plea argues that the inclusion forces CAs and CFAs to police their own clients even when a case under the PMLA has not commenced. The matter will now be heard on the 4th of October. And before we wrap, the countdown begins. Chandrayaan-3 has reached closer to the moon. The Vikram lander is scheduled to touch down on the surface of the moon around 6 p.m. on the 23rd of August. If successful, India will be the first nation to land a probe on the south pole of the moon. Just yesterday, Russia's Luna 25 failed in its attempt to land on the south pole of the moon. All eyes on Chandrayaan-3. And CNBC-TV18.com is your destination for all the updates on the Chandrayaan mission. Our live blog brings you minute-by-minute update of every development. We also will be joined by experts who will share their analysis and give you a blow-by-blow account of the mission and its significance. So log on to CNBC-TV18.com for the latest on India's landmark moon mission. And with that, it is time for us to wrap up this edition of India Business Hour. From all of us here, many thanks for watching. Do stay tuned to CNBC TV 18. The news will continue.